Let's talk about an elder statesman in this game. David Ramsey. David Ramsey. Shout out to Dave Ramsey. Before I say this, I want to preference this by saying I have no issue with Dave Ramsey, man.
I actually like Dave a lot.
Yeah, he's done some good stuff for the financial literacy community, help people get out of debt. He's done some good things. He had a thing where he said how to invest your money.
I got it right here.
Invest in mutual funds, spread equally in 4 categories: growth and income, aggressive growth, international, real estate, paid in full. Don't invest in singular stocks, Bitcoin, or any cryptocurrency, whole life insurance policies, annuities, bonds, micro investing, REITs, ETFs, and CDs. David.
Mike, clip that up.
When I saw that, I looked at it, I'm like, yo, bro, I'm everything on the don't list. Thanks, David.
David.
Trying to keep us. He trying to keep us there. You want to keep us there, Ian?
There's a different strategy for, and I've used his baby blueprint to get out of debt. I tell everyone that's the formula I use to get out of debt. But I think for us that are black and brown or lower income, once you get out of debt, what happens? Magically, some big debt or an accident happens and all of a sudden you go back in. I understand he may have a position, but it's not based on stats. Everyone, I want you to tell me, what is the 11-year return for Bitcoin? I'm not the hugest fan of crypto, right? But I've been investing in it since 2013. I know a lot of people like to talk, but I didn't see your face at these conferences at Money Show in 2014. I'm gonna be real. Single stocks: Apple, Microsoft, AMD, Tesla, Nvidia. Even you could throw Micron. It's a huge mistake to not invest in single stocks. I like to hedge with indexes or ETFs. I agree, no CDs. I agree with if you can pay real estate off in cash, better to not have the debt. But I think in this situation, he was over-levered. And I think what he's trying to prevent people from doing is to be in an over-leveraged situation where the loan gets called. I get it because I'm big on no debt. But to say no Bitcoin, no crypto of any kind, no single stocks, I think no ETFs.
No ETFs?
It's the safest damn bet you can make in the market. So if you guys just go look, don't believe me and don't believe Dave or Troy or Rashad, and Rashad's in a good mood today because I thought he was going to be on bullshit like me. Go look at the 5-year and 10-year return and go to year-to-date return, ytdreturn.com, and compare mutual funds versus the ETFs, mutual funds versus Apple and Microsoft, and you can see what the growth is over time, and that'll tell you everything that you need to know if you should.
It's not comparable
at all.
It's not comparable. I'll tell you. I'll save you the time. It's not even comparable. So when I saw that, I was just like, "Wow!"
All-time return for Tesla is like 24 or 28,000%. How could you stay out of that? I don't know how.
The part that I don't understand is he's saying don't invest in ETFs, but invest in mutual funds. Mutual funds are kind of similar to ETFs, and then he's saying invest in a growth mutual fund. So if you're in a growth mutual fund, let's take a mutual fund like Franklin Diantech Fund, who I actually like that mutual fund.
It's a good one.
But it's very comparable to QQQ. What is really the difference, except for it's more expensive? So why are you encouraging people to invest? I could see if he said an index fund. I don't understand why you're encouraging people to invest in mutual funds, but not ETFs, when ETFs are very similar to mutual funds. Like
there's mutual funds cost more.
Well, that's what I'm saying. So yeah. I just don't understand that. If he said just invest in the S&P 500, that would make more sense.
And international exposure is trash. Name me 5 companies overseas that are outperforming American stocks. Jeopardy music, somebody. Mike, cut this in.
I'll wait.
There aren't many. Spotify? Oh, come on. There may be like 5 good companies. And if China didn't have the rule that it did over its regime, but I would stay out of international affairs. You can argue Alibaba would probably be way better, but right now,
not time.
Yeah, Shopify may be the only one. Yeah, kudos.
Yeah, there was a great article in Forbes today about Shopify. Or Spotify, not Shopify. I'm sorry. I'll talk about that later.
And I also don't understand when he says not to invest in Bitcoin or cryptocurrency. I don't understand that. I can understand not investing in things that you don't understand. And if you don't understand it, you shouldn't invest it before you're educated. But when you see JP Morgan, when you see all of these big institutions, all of these banks buying up cryptocurrency, buying up Bitcoin at rapid rates, high level of adoption. Mm-hmm. I mean, obviously, you're talking about something that is not going to go away tomorrow.
It has an institutional floor and ceiling, and everyone knows the ranges in between, and it's a safe haven. But this is key. Why I tell you guys to read so much, so you don't become a dinosaur. Like if we ever get to 15% interest, you're going to hear me have a completely different take on 2 Tech 2 Index. I'm going to say throw it away. Doesn't work. Go all JP Morgan. Shout out to Nicole.
Who's back?
And the environment, and the environment that we're in right now, low interest rate, low capital, 2 Index, 2 Tech works perfectly. You have to know when your strategy will break down. But yeah, I think it's a huge mistake to say not to invest in anything but mutual funds and growth and income. So, but I love Dave. I just don't like that take. It's wrong.
Yeah, I think that the new age retail investor that's just they're gonna look at that like what are mutual funds, number one, what are bonds? They know cryptocurrency, they know singular stocks, right? It's just a new way of investing, and people, this is their introduction into investing. And so, not to say not knocking mutual funds or bonds, but this is what this age group, this new revolution, this is their introduction into investing. At some point, maybe they'll explore those things, but right now, ETFs, individual stocks, crypto for sure, and real estate.
You're done.
That's where they're at.
You're done, Dave.
Dunzo.
Thank God I got it. I don't have a meeting there tomorrow.
Don't panic. Don't panic. Don't panic.
He needs an adjustment. I'll say that everyone needs to be aware of what is coming.
Shout out to being in the business charts.
Shout out to Dave, man.
He put a funny one on us.
Shout out to Dave, man.
He put a funny one on us. Shout out to that guy.
Shout out to you too, man. We got 7,700 people on the check-in. This is a big show. Big show. All right. Billionaire investor Ray Dalio. So it was crazy. Ian said this in the group chat, but I actually had put it in my story like 2 minutes before he sent it in the group chat. Mm-hmm. He made news. He wrote a new book, and he says that America's decline will not only upend portfolios, but it will upend lives. He's predicting that the economic decline of America will lead to a war. He even said a civil war. He said it's a 30%.
Civil? I thought he said just a
if you look on the other one that I posted, he says it's a 30% chance of a civil war. That is a little too far, I think. But he's saying that the China's strength, America's weakening of the dollar, inflation, putting so much capital out there, our debt has jeopardized national security and will lead to the downfall of this empire.
Polarization, widening wealth gaps, inflation, and the fact that China can compete with us, like really, and
not competing, they're winning.
That's something some people may argue surpass us.
Yep. And what's the number one movie in China right now? Somebody put it in chat, because now you have the propaganda side. Me being on the marketing side, if you study the history of PR with Edward Bernays, which is Sigmund Freud's relative. The number one movie in China right now is a war movie about how they defeat us.
Is it really? Wow.
Oh, baby.
And so, we watch Pixar movies.
And on top of that, in 1 month, Elon, Bezos, and Jack have sold a considerable amount of their portfolios and telling you that it's for tax reasons. Okay. The last time this happened was right before the crash of 2020. They're telling you the writing is on the wall that a pullback or hard crash is going to come very, very soon in the next probably 2 years, which I've been telling you guys for the last probably 12 or 13 months. So
let me ask you this, because I just, I get these random thoughts sometimes. And as I was coming over here, I just had a random thought, like, we put so much money, especially as you start to get more and more money in your brokerage account. And, you put money in the brokerage account and you're putting this money into the bank and all that. What happens? What happens if this thing just falls apart? And it's like, I don't know. Like, what if I know it's a very slim chance, it was always a doomsday situation.
But you always have to plan for those events.
Yeah. So should you have physical cash? Should you have gold bars? Like, what is your hedge?
People say that about gold bars. Like, what can you actually trade them for if we're in a disaster area? You actually put your family in more danger having cash and gold on hand in the environments in which we grew up.
So you saying like, is it like an I Am Legend situation or like what are we talking?
But I mean, I don't want to be like a doomsday, obviously, but it's something to consider, because especially when you start to have a lot of money. Let's say 80% of your wealth is on, whatever portfolio. It's an app, right? What happens? What happens if what happens if anything happens? What something happens?
You have to make sure. This is a good question. You have to have your money in a brokerage that is well capitalized. So if there is a run on the brokerage, which is different from a run on the bank, do they have enough reserves for your trade still to be able to go through? Also, this is what I'll tell you guys, mark off 50% from the highs and 75% from the highs. Those are the places in which you want to buy. Then you need to look at the companies they've acquired, the founders and chairmen, to see, have they bid at other banks or brokerages in which they have went under and they got bought? Because if so, chances are very high that they're going to go under. That's why I love TD Ameritrade. I know if anything happens, it will take an act of God for them to go under. It's different. Now, if you got a little smaller rinky-dink brokerage, money may not be there tomorrow. For those of you that trade on a non-top 10 platform, you should probably max out at maybe $500,000 or $600,000 in trading profits inside of there in case. And also read like the actual disclaimers that they give you. What happens if the market goes under? You have to be mindful of these things.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop. Bag drop.
Bag drop.